Hello, traders, you're watching weekly review of the US stock market, presented to you by ИнстаФорекс news team and me, Kate Недачина. Wall Street ended mixed. Over the week, all main indexes remained in the green, even though investors switched from risky assets to treasury bonds. Dow Jones sank by 50.67 points, or 0.3%, to close at 16,662.91 points. During the whole week, the index grew in value by 0.7%. S&P 500 dropped by 0.12 point, losing less than 0.1%. Its final reading last week equaled 1,955.06 points. The weekly gain of this index was 1.2%. As for Nasdaq Composite, it rose by 0.3% to 4,464.93 points, just enough to get back to a positive territory. Over the week, it consolidated by 2.2%. Ukraine claimed to have destroyed part of the Russian armored column, but Russia's government denied its forces had crossed into Ukraine. What's more, the yield of 10-year US Treasury bills dropped by more than 5 basis points, below 2.35%, as investors' appetite for safe haven increased. John DeClue, principal investment analyst at a private client reserve of US Bank, said that there is nothing unusual about flexibility of the market amid geopolitical tensions. He added that their corporate profits turned out to be much better than expected in the second quarter. This is a telltale sign that the economy is picking up their pace. Since there are no deep corrections, we can conclude that investors do not tend to overreact to geopolitical risks. It should be mentioned that the US industrial production edged up in July, as production of auto parts and motor vehicles jumped considerably. At the same time, the producer prices in America increased by only 0.1% in July, which means that inflation will hardly be consistent with the Fed's target in the short run. The preliminary reading of the Consumer Sentiment Index released by the University of Michigan and Thomson Reuters appeared to be the lowest since November. However, this publication did not affect the behavior of investors much. The list of the companies whose papers showed the most impressive dynamics is topped by Monster Beverage. Its share slipped the most among other S&P 500 constituents after Coca-Cola announced plans to buy its 17% stake, making Coke the corporation's largest shareholder. Coca-Cola is to pay $2.15 billion to move its energy drink business to Monster Beverage. Meanwhile, Applied Materials Incorporated demonstrated outstanding results as well. The shares of the corporation soared by 6.29% after quarterly earnings report surpassed expectations. On Wednesday's night, Applied Materials said it earned 28 cents per share, making a revenue of $2.27 billion. Economists had projected 27 cents per share and sales totaling $2.29 billion. It was weekly review of American stock market. See you soon.